Hey everyone, welcome back to Corporate Decoder, the place where we unpack complex financial jargon into plain English. Today we are diving into the latest shareholder report from the Marsico Investment Fund, a look at how their various funds performed over the past year and what surprises might be lurking in the numbers. Before we dive in, if you enjoy getting insights straight from the source and want to stay ahead of the curve, make sure you hit that subscribe button and don't forget our Discord community linked in the description below. It's a great place to continue the conversation. So the Marsico Investment Fund provides us with a look at 5 different funds: Marsico Focus Fund, Marsico Growth Fund, Marsico Growth Fund, Marsico Midcap Growth Focus Fund, Marsico International Opportunities Fund, and Marsico Global Fund. Each of these also has an investor class and an institutional class, so that's 10 different performance stories to peek at. The report is for the period ending the 30th of September 2025, and it gives us a great snapshot of their financial health and investment strategies. First, let's talk about what it costs to invest in these funds. For the Marsico Focus Fund Investor Class MFAC, investing $10,000 would have cost you $130 in expenses, which is 1.19%. For the Institutional Class MyFox, for the same $10,000 investment, it was $102 or 0.93%. As you can see, the institutional class is cheaper. This difference in cost highlights how fees can eat into returns over time, so it is always smart to pay attention to them. Now for the big picture, Marsico Focus Fund Investor Class shares returned a solid 18.82% for the year, beating its benchmark, the S&P 500 index, which returned 17.60%. That's a good sign, showing the fund managers made some smart moves. They attribute a chunk of this outperformance to stock selection in the industrial sector, and a smart underweight in the weak healthcare sector, and an overweight in the strong communication services sector. They specifically called out GE Vernova Incorporated and Nvidia Corporation as top contributors. GE Vernova saw improved earnings due to strong orders for data center and artificial intelligence buildouts, and Nvidia benefited from soaring demand for AI chips. But of course, not every pick was a winner. The report mentions that stock selection in consumer discretionary financials, communication services, and information technology sectors hurt performance relative to the benchmark. They also underweight the strong performing financials sector and overweight the weak performing materials sector. Chipotle Mexican Grill Incorporated was a detractor due to rising costs and leadership uncertainty, and they exited that position. KKR and Company Incorporated was also sold off as fundraising slowed. Looking at the growth of $10,000 for the Focus Fund Investor Class over 1 year, it returned 18.82% over 5 years. It averaged 15.09% annually, and over 10 years it averaged 17.33% annually. Compare that to the S&P 500 index, which returned 17.60% over 1 year, 16.47% over 5 years, and 15.30% over 10 years. So the Focus Fund with the investor class has outperformed the S&P 500 over the 1 year and 10 year periods, but slightly underperformed over the 5 year period. This report also gives some key stats. For the Marsico Fund's combined net assets were over $1 billion. The total number of portfolio holdings was 22, and the portfolio turnover rate was 64%. A turnover rate of 64% means they bought and sold 64% of their portfolio over the year, which suggests active management. Their top 10 equity holdings give us a clue about where they are putting their money. Microsoft Corporation is number 1 at 9.39% Meta Platforms. Incorporated Class A is next at 9.06%, and Nvidia Corporation follows at 8.78%. Then Apple Incorporated General Electric Company DBAG Aerospace, Amazon.com, Incorporated Taiwan Semiconductor Manufacturing Company, Limited Spon IDR Netflix, Incorporated GE Vernova, Incorporated and the Boeing Company round out the top 10. This concentration in a few large tech and industrial companies shows a clear strategy. Moving on to the Marsico Growth Fund Investor Class Megrix, it posted a 19.13% total return for the year, once again outperforming the S&P 500. They credit this to smart allocation to communication services and industrials and maintaining a low cash position. They also highlighted Robinhood Markets Incorporated Class A as a key contributor benefiting from product velocity and IRA accounts. Nvidia Corporation was also a strong performer here. On the flip side, stock selection in consumer discretionary and information technology sectors hurt relative performance. Starbucks Incorporated was a detractor due to weaker international sales, and they exited that position. Chipotle Mexican Grill Incorporated also weighed on performance. For the Growth Fund Investor Class over 1 year, it returned 19.13%, over 5 years it averaged 13.61%, and over 10 years it averaged 16.52%. This shows strong long-term performance compared to the S&P 500 index, which averaged 15.3 0% over 10 years. The Marsico Growth Fund had net assets of over $411 million with 29 portfolio holdings and a significant 117% portfolio turnover rate. That high turnover suggests a very active trading strategy. Their top 10 holdings show a similar tech focus, with Nvidia Corporation leading at 8.36%, followed by Microsoft Corporation, Meta Platforms, Incorporated Class A, Amazon.com, Incorporated Apple Incorporated, and Netflix Incorporated. Robinhood Markets Incorporated Class A, Alphabet Incorporated Class A, Broadcom Incorporated, and MasterCard Incorporated Class A complete the list. Now let's look at the Marsico Midcap Growth Focus Fund Investor Class MX6. This fund had an explosive year, returning 37.09%, beating its benchmarks, the Russell 3000 Index and the Russell Midcap Growth Benchmark Index, by a large margin. The managers attribute this to strong stock selection in communication services, industrials, information technology, and financial sectors. Palantir Technologies Incorporated Class A was a top performer as commercial adoption of their AI platforms broadened, and Outperforming Corporation also performed well, driven by their AI-powered Accession engine. However, stock selection in consumer discretionary and consumer staple sectors negatively impacted performance. They also underweight the strong-performing utility sector and overweight the weak-performing consumer staples sector. KKR and Company Incorporated and Chipotle Mexican Grill Incorporated were also detractors here. For the Midcap Growth Fund investor class over 1 year, it returned a phenomenal 37.09%. Over 5 years, it averaged 14.75%, and over 10 years, it averaged 15.42%. This is impressive, especially given its recent stellar performance. This fund had net assets of over $608 million with 41 holdings and a portfolio turnover rate of 106%. That is very high, indicating a very aggressive approach. GE Vernova Incorporated kicks off the mid-cap list at 4.89%, followed by Robinhood Markets, Incorporated Class A Roblox Corporation, Class A Corporation, Spotify Technology, SA Siemens Energy AG Heiko Corporation rolls. Royce Holdings plc TKO Group Holdings Incorporated, and Amphenol Corporation Class A. The Marsico International Opportunities Fund Investor Class MIFX delivered a strong 34.45% return in US dollars, outperforming its benchmark, the MSI ETH Index, by a wide margin. This outperformance came from strong stock picking in industrials, information technology, and communication services sectors, and an underweight in healthcare and an overweight in communication services. Rolls-Royce Holdings plc was a significant contributor due to recovering civil aerospace flying hours and resilient defense demand. Spotify Technology, SAR, also performed well thanks to resilient subscriber growth. An underweight in the strong financial sector was a detractor, as was stock selection in consumer discretionary and healthcare sectors. They also maintained a relatively high cash position of about 7%, which hurt relative performance. Novo Nordisk as Class B and Ally Lilly and Company were mentioned as detractors, and the fund exited those positions. For the International Opportunities Fund investor class over 1 year, it returned 34.45%, over 5 years it averaged 13.58%, and over 10 years it averaged 11.80% annually. Net assets for this fund were over $161 million with 33 holdings and a 54% turnover rate. The top 10 holdings include Rolls Royce Holdings plc Siemens Energy AG Outperforming Corporation Class, a Taiwan semiconductor manufacturing company, Limited Spawn. ADR Nvidia Corporation Alibaba Group Holding Limited, Tencent Holdings Limited, ADR Microsoft Corporation, Meta Platforms Incorporated Class A. Safran SAR, interestingly, Nvidia and Microsoft appear here, again despite this being an international fund. Finally, the Marsico Global Fund Investor Class MGLBX had a very strong year, returning 33.45%, outperforming the MSCI All Country World Index. Strong stock selection in industrials, communication services, and information technology sectors, along with an underweight in healthcare and an overweight in communication services, were key drivers. Roles: Royce Holdings plc and GE Vernova Incorporated were highlighted as top performers. Weak stock selection in consumer discretionary healthcare and financial sectors detracted from performance. An underweight in the strong financial sector also created a drag. Novo Nordisk, AFU's Class B, and the Goldman Sachs Group Incorporated were called out as detractors. For the Global Fund Investor Class over 1 year, it returned 33.45%, over 5 years it averaged 13.69%, and over 10 years it averaged 15.71%. This shows solid long-term growth. Net assets for the global fund were over $462 million with 29 holdings and a 68% turnover rate. The top holdings include Rolls Royce Holdings plc, a Plovin Corporation class, a Taiwan semiconductor manufacturing company, Limited Spawn ADR Meta Platforms, Incorporated class, a General Electric company, DBAG Aerospace, Siemens Energy Ag Spotify Technology, SAG Vernova, Incorporated Tencent Holdings Limited, ADR Netflix Incorporated. Again, we see a good mix of global names here with a strong tilt towards technology and industrials. Looking at the actual financial statements, we can see the net assets for the Marsico Focus Fund were over $1 billion, and for the Marsico Growth Fund over $411 million. The report details income and expense for each fund. For the Focus Fund, investment advisory fees were over $7.5 million, while for the Growth Fund they were over $3.4 million. The auditors PricewaterhouseCoopers LLP gave a clean opinion on the financial statements, stating they present fairly in all material respects. They billed over $226,000 for audit fees in 2025 and over $65,000 for tax fees. No audit-related or other fees were significant. The notes to the financial statements explain how investments are valued. Generally, securities traded on exchanges are valued at the last sell price. For securities where market quotations are not readily available, they are valued at fair value as determined by the advisor. The report also details the fund's accounting policies, including how they handle foreign currency translation and derivative instruments. For the year ended the 30th of September 2025, they had no outstanding derivative instruments. The funds are structured to qualify as regulated investment companies, which means they generally avoid paying taxes themselves by distributing income and most capital gains to shareholders. For the year ended the 30th of September 2025, the Marsico International Opportunities Fund designated approximately $581,000 of income, derived from foreign sources, and paid around $41,000 in foreign taxes. So what is the story here? The Marsico funds generally had a strong year, with most of them outperforming their benchmarks. Their strategy seems to lean heavily on a concentrated portfolio of high-growth technology and industrial companies with a willingness to actively trade them, as shown by their turnover rates. The mid-cap growth focus fund MEX6 really stood out with an exceptional return this year. However, their investment in a few key sectors and companies carries inherent risks if those specific areas or companies underperform. The international funds also showed good performance despite global economic uncertainties mentioned in the report. Overall, the fund managers appear to be making bold choices that have paid off recently. They are not afraid to have concentrated positions and actively manage their portfolios. For investors who align with this growth-focused strategy and are comfortable with a higher turnover rate, these funds could be a good fit. But as always, remember, past performance is not a guarantee of future results, and the risks associated with concentrated portfolios are always present. What do you think of these Marsico fund results? Are you invested in any of them or others like them? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out, and subscribe for more dives into the world of corporate finance. And again, check out the Discord link in the description to join the conversation. Thanks for watching, and we will see you in the next video.